The first rates then this Monday morning or Tuesday morning, I stand corrected. The long weekend puts the days a little haywire for you. They look like it's a comfortable start. We've managed to clock in that 13,000 mark for ourselves. Let's just see what some of the auto names are up to. Bajaj Auto's numbers just came on for you on the screens, about a 0.5% uptick coming in there. I want to see what Eicher is up to. It's a 33% uptick that they've posted in the November sales figures. We'll just have the month-on-month data as well. So let's see where Eicher is currently. M&M has been a very strong show. That's been the case pretty much all through November, as was the case last week too. M&M though has started off a lot more muted. Escort seeing some profit taking. You know, that's the big fear, considering the kind of run-up that you've already seen in anticipation of the November data. So any miss in that sense is going to be a bit of a dampener when it comes to Motown numbers, and maybe a buy on anticipation, sell on news kind of story is what could play out for autos. 13,000, it's a lot more muted a start as opposed to what the pre-open rates were indicating, about 0.2% higher. We're just circling around the 13,000 level as we speak right now. The breadth of the market, though, has held out quite positively, so that's not really giving you any cause of complaint. I can see metals as a trade is still holding out. Technology in bits and starts is also showing you some bit of green. I want to see what SCI is up to. Much talk about the divestment over the long weekend, so that stock may be seeing some sentimental knee-jerk reaction. And then, of course, the gas names from Friday, whether or not they're continuing their uptick or not. MGL, IGL, both were on a tear after the PNGRB notifications coming in. So just look out for that trade as well. But all in all, it's a comfortable start. We started off muted, pretty flat for the Nifty, but there's much traction when it comes to the broader end of the market. And that's okay, because the broader end is now playing catch up. DLF, Infosys, Nalco, Shree Cement, these are your liquid movers right now. You're also seeing positive trades coming on Cipla, holding up 0.6%. Balkrishna Industries, as though tire as a story in any case has been very, very strong before autos. It's tires and ancillaries which actually showed first signs of a recovery coming in, and this is a good 3 to 4 months back. Balkrishna Industries continue to lap on gains, about 1.25% higher there even now. What's not looking good then? Nestle, it's down 2%. Escorts now reacting to its monthly sales data, which has fallen short of market expectations, about 2% downtick there as well. Amara Raja Batteries, M&M is on the sidelines, about 1.5% lower. And the bank Nifty has had a bit of a flat start. Let's see how these rates actually build in for themselves. As of now, it's really a no-go. We're standing flat at 13,012 on the Nifty futures. Hiren Ved then joins in on the show. Hiren, hi, good morning. Good to have you on the show. Hope all's well.
Thank you so much. Thank you for having me on the show.
Great. And what a fabulous November it has been, Hiren. We're just wondering whether December is going to be as strong. It's been a happy Diwali. Is the Santa Claus rally traditionally going to play out, or do you think the best is now behind us?
Yeah, I think, I think November was great in the sense that, the market breadth was much better. You had almost all sectors participating, and especially the small and mid caps also participated in November. And therefore, this broad market rally is quite welcome, because usually, in the early part of a sharp recovery, it's always led by the large caps, and the mid and small caps tend to follow. And I think we saw a glimpse of that in August, and now we've seen a follow-up in November as well. I think this, the improvement in the breadth should continue as we go into December as well.
Sure. And that's why, Hiren, the big question now is, you've had a great run up. The Nifty and the SENSEX have given you great returns from the March lows. Do you now need to tactically realign your portfolios and perhaps increase exposure into small and mid caps, because that's where perhaps a higher beta can be caught on?
Yeah, so, essentially my sense is that if you look at the small and mid-cap stocks, right? We entered a bear market in small and mid-caps from Jan-Feb 2018, when there was a significant overvaluation of small and mid-caps to the large-cap index, right? They were trading at historic high premiums. And since then, we've seen a bear market in the broader markets and in the small and mid caps, which I think ended in June 2020 this year. And I think from July, August, we've seen a steady re-rating in the small and mid caps, which I think should accelerate into the next year. So I think we've seen a 2.5-year bear market in small and mid caps. And I think we are beginning to see that the small and mid caps should start to outperform from here onwards. Typically, in my experience, there are 3 conditions which are important for small and mid caps to do well. One is that their relative valuations compared to large caps has to be at a reasonable discount, or it can't be at a significant premium, which is true now. Secondly, you need enough loose monetary policy conditions, loose liquidity conditions, because that's when the smaller companies tend to do well. And the third is we need to see a recovery in economic activity and acceleration in economic activity. I think we have pretty much all the 3 conditions in place today for a steady improvement in the breadth, and we will see a small and mid-cap rally. Having said that, I must also caution that even within the small and mid-cap space, you will see a lot of consolidation. And that, in my opinion, money will only flow to the best run small and mid-cap companies. So one has to be very careful when we tend to generalize this, that I think that even though small and mid-caps will do well, I think we need to be very mindful of balance sheet quality, of governance and scale within that space.